Hello and welcome to ABG Investor Day. My name is Simon and I'm an equity research analyst here at ABG. I have the pleasure of welcoming Andreas and Jonas from IMINT. They will hold a presentation of the company, and after which we will have a short Q&A. The floor is yours.
Thank you. Thanks for everyone tuning in. So I'm Andreas Lifvendahl, CEO at IMINT since the last 10 years. And with me, I have Jonathan, our CFO as well, to help me out. So 20 minutes goes quick, so let's jump right into this. And we'll not cover all the slides material you got. We'll cover the initial slides and spend the time there and hope for some good questions at the end. So next slide, please. We start with this cliffhanger because this is a sort of milestone event in our new journey as a high growth company. This is now 3 years back. Richard Yu, the general manager of Huawei devices, introduced the Huawei P20 Pro when Huawei decided to battle Apple and Samsung for leadership in the smartphone domain. And they were very proud of the camera and especially on the video quality in the new phone. And they showed impressive demos how they were running circles around the iPhone at that time. And of course, now we all know that the secret ingredients behind that sauce was this small Uppsala company, IMINT, and the Vidhans software. So next slide, please. So IMINT is our company name. We are more known in our customer market for the brand Vidhans. This is a bit confusing, but that's just the way it is. We are a software product company. Two equally important aspects of our company identity. So software is all we do. We work a lot on complex hardware, but we only deliver software. We never touch hardware in the supply line out to customers. And we are a product company, which means that we not only software experts, but we bundle all the expertise, all learnings. We always strive to make that a packaged product that we can build once and sell many. And we are really the software that creates new capabilities for camera-powered devices, especially those that are moving or handheld or worn on your body. With these challenging video environments, we are the real experts. And especially in the consumer domain, where we have our biggest market today, it's really about liberating storytelling for normal smartphone users to tell compelling stories using video, which is actually quite hard if you've tried it. So we try to really make that as easy as possible and having end users feel proud of the result. Next slide. This is the classical one-pager on our company. So we are now going on 14 years soon, founded in 2007 as a spin out of Uppsala University, a research group called Center for Image Analysis. Initial work in the industrial and defense domain for video stabilization for the drones, actually. So in a way, we're now returning back to our roots. 5 years plus now as a listed company on Spotlight, December 2015, we did our IPO. Very engineering heavy company. Many of us have Master of Science degrees or PhDs, so it's really a deep tech type of company. As you can see on the world map, head offices in Uppsala, around 35 people sitting here, and then we have our second office in Shanghai, which is sales and customer engineering, and then we have sales representatives in Korea, Japan, and Taiwan, although the Taiwan guys actually sits in Singapore. Our core expertise is in imaging, of course, but it's really the hard part of imaging, which is the real-time analysis and sensor fusion. We have sensors like motion sensors, combining that with camera sensor data in a fast and efficient way to create a virtual model of any moving camera system. That is really the technology backbone of our company. We bundle that expertise together with our expertise now in having those infused in chipsets that runs in smartphones and other devices, and we package them as products. And today we have most of the largest smartphone makers as customer in the Android spectrum. So that means we are not dealing with Apple, but all the other guys are on our customer or prospect list. Next one. So current target segments. Now we are expanding beyond smartphones. Smartphones is still our main market. It's also the market that is driving our technology and new product development, because that is really a leading market also in terms of the technology envelope. But we are now getting more customers and see a lot of more interest in adjacent markets. And you have some examples here like action and body-worn cameras. Here you have both the consumer market, but even more interesting, probably the professional market, like police body cameras or surveillance cameras. Smart glasses, smart watches, wearables market is also a dual market where you have high volume consumer market, but also more and more now growing an industrial market. And we have a few interesting customers in the remote maintenance segment where you provide frontline workers with smart helmet mounted displays and smart glasses, and you can allow for a remote product expert to guide remote services. Drones is coming back. As I mentioned, that was our roots when we started, and now we see a lot of interest from the drone market as well. And that's obviously a good example of harsh filming environments with moving cameras and a need for really good video quality. And expanding this further beyond, you see a growing IoT market where cameras is really cheap and versatile type of sensors to put in a lot of different devices. Surveillance and security is also a natural camera-driven market. So these are the key markets, but we are also working on longer-term partnership, both with camera module makers, chipset makers, and so on. And these are more explorative ways to find new channels to the market. So these are our longer-term investments that we have. Next slide. Here's a bragging slide. As I mentioned, we founded in 2007, and the first chapter of the company life was a classical research-heavy startup, getting sponsored by government grants, happy early investors, and defense research institutes. So we had customers in Norway, Sweden, South Korea, US, and so on. And we did a lot of interesting proof of concept projects that learned us a lot, both in terms of product development and features, but also, of course, having really hard requirements from hard type of customers. So a really excellent primary school for a young company. Drawback with this early market was that the product life cycles and time to money was very long. So we decided to look for more rapid moving markets around the year 2013 and 14, and we settled on the smartphone market to really make a difference there. The timing was perfect in terms of the hardware evolution in smartphones, and also how they became more and more camera-centric devices, replacing the digital cameras that we used 10 plus years ago. And now everyone is using the smartphone to take pictures and shoot videos. So in these years, since we decided to go for the smartphone market, we have seen a very rapid growth. So landing close to 50 million SEK last year, starting from basically scratch in 2015. Have most of the smartphone OEMs as customers. And now I think we have exceeded 500 million devices. This slide says 400 million, and that gives an indication of how quick we are growing now. So in the last quarter, we estimate that more than 50 million units with our software integrated was shipped to consumers. And more equally important is, of course, the brand and reputation that we have earned by working with these giants. And now we are now a well-respected and established brand in the smartphone domain, and that is now spilling over to new type of customers. So we have earned the credibility of working with these giants, and now we see more and more traction in other domains, as I mentioned. We have 4 consecutive quarters of positive earnings, and a really healthy growth rate. So next slide. Here's many years back our revenue slide per quarter in our customer currency US dollars, and as you can see, our last report on Q2 was an all-time high in terms of customer currency. So there are a few bumps. It's not a straight line, but the overall trend is really positive for us. So next one. And here we're looking at half year because they are typically annual cycles in terms of smartphone volumes and how we earn our money. So you can see the growth for full years 18, 19, and 20, and our earning or our revenue so far in 2021. And we have kept cost at a fairly steady level over the last 3 years. And here you see the merits, of course, of being a scalable software company, because once you get top line up and grow there and can keep cost steady, you see a really strong improvement in margins. So we're now having really healthy profit levels. And we can take the next one. Here's a busy slide, and I'll probably spend my last 5 minutes mainly on this one, because this is trying to capture the business model and the business environment we are in from a sort of intelligent investor audience as yourself. So if we start at the top, the product, we're a software product company, and the key benefits and what builds barriers for competitors is really the extremely optimizations of our software and how they are built in a clever modular way. So we have one underlying Vidhans platform that does mathematical analysis on the sensors. And on top of that, we spin products or end-use products at a good margin. And they are very entangled, and that creates stickiness, and they are really optimized for the chipsets to be very lean on the battery. And also in terms of quality assurance and how our customer integrate those products, they hold together. It's a very streamlined process of adding our functions to new smartphone, validating that it works and calibrating it to premium performance. So we spent a lot of our engineering time in that process, actually, not so much on the algorithm itself, but actually the process of getting it into a phone in a smooth way with high quality. And in addition to the actual functions, we provide these tools for calibration, tuning, and integration that also creates stickiness. And it's actually also an excellent sales platform. If we have new products, we just add them to our software development kit, and our customers can very easily evaluate new functions from us. And if they decide they want it, they just sort of enable it, turn that flag on, and we send a bill. The underlying value that our products provide, I mean, is of course premium video and image quality. And that has a real strong value both in the consumer market and in the industrial B2B market. In the consumer market, that's because, especially for smartphones, it's more or less cameras that sells new devices. It's extremely camera centric. That's where you see main features. That's where you see, when you see launches of new flagship phones, more than half of the presentation is geared towards photo and video capabilities of new devices. So that is really driving not only the smartphone market, but also the camera module market and sensor markets. So we're really in a nice spot where a lot of hardware investments are going. And the software that we provide sort of unlocks the potential of these hardware investments. The market, if we go to the right, from our perspective, 90% or more of our revenues are related to the smartphone market. In the smartphone imaging market, if you take all type of software that goes into a smartphone, including patents for codecs and so on, we think we are just below 5% of that market. It's our piece of the wallet. So there's a big growth potential, especially if you expand it not only to video, but also to still imaging. So we have a big growth potential in the existing market, plus that the imaging market in itself is steadily growing because of the camera-centric nature of smartphones. We see that we have longer term and really strong growth opportunities in other camera markets. I mentioned one example, and that is smart augmented reality glasses and other smart glasses, where you see both consumer and industrial high growth forecasts. And I think the COVID pandemic has really propelled the adoption of remote maintenance and remote services markets. Of course, if there's really good signs that we are in a really good spot, other companies realize that as well. So we have, of course, competitors. To mention two of them that are independent software companies is a Chinese company called Arcsoft, many times larger than us, high growth company as well, and sort of a legacy competitor called Morpho, that is a Japanese company. They can be worth checking up because they are also both public companies. And of course, we see alternatives that some customers want to do things in-house, and we also have the chipset providers that provide basic functionality that overlaps with some of our products. In terms of the money-making machine, 90% or more is from IP licensing. And the models here vary, and that makes it hard to give an sort of an average sales price for us, because sometimes we have straight royalty models. Sometimes we have royalty models where they get discounts if volumes climbs over the year. We have models with fixed annual fees, and we have hybrid models where they pay royalty up to an annual cap per IP type and so on. So it's a mix, and we have deliberately wanted to create a mix. We have more vision into the future, a more balanced type of revenue streams. So we're not really very dependent if the overall smartphone market grows 5% or declines 5%. So we're pretty robust in terms of quarterly changes in overall smartphone volumes. We have recurring revenues from support and maintenance agreements, tools, licensing, and that share is small, but that is growing. And especially since we move into more industrial customers, we see more old school kind of deals where a larger portion is based on long multi-year maintenance agreements, including updates and so on, which I think is healthy for us. And finally, sales conduct them mainly through direct key account sales to the smartphone market. I mean, there's a limited number of really huge customers that we all can address directly with really competent sales team. When it comes to broader market penetration, like in wearables, we're working more with marketing, both inbound marketing, making a lot of announcements, press, working with the press and so on, both using a US and a Chinese PR firm, and also now more and more sort of account marketing, where we look at certain segments where we have initial traction, and then we knock on every possible door that we can find, and hoping to find the right opportunity when a new product is under consideration, because then we have a perfect timing for them to evaluate our solutions. And I'll actually stop here because that is 20 minutes to the second, and I think I covered most aspects. And if you flip through the material, you will find more fine-grained details on our portfolio, our market shares, customer references, and so on. So I'll leave it up for Q&A.
Great. Thank you, Andreas. First off, you mentioned some of your competitors. What would you say is your biggest competitive advantage?
I think it's the agility and our focus. So we do today products that are related to moving cameras and all the things that are connected to that. Video stabilization is sort of the key thing, but there's a lot of add-on functionality that strengthen that niche within a niche. And we really have sort of cemented that position. And our customers know that we are world leading. So it's that focus. And I also think that being a small European company working with big Asian customers, from the onset, we've tried to have a very digital delivery method where we can't really put 5 guys on site for every customer project. So we really had to invest a lot in our tools and methods to make a really efficient integration. And once customers adapt to that, they see the benefits as well. They reduce risk and have more self-reliance in that way of doing things.
Thank you. And how large could the industrial wearable market segment be for you? Can we compare it to the mobile segment in terms of market size?
Nobody really knows, to be honest. I think you see a lot of wearables that hasn't really taken off into high acceleration yet, but a lot of crystal ball experts point to that. We think conservatively that within 5 years, maybe non-smartphone revenues is around 30 to 50% of our total revenue cake. Some segments, I think, like smart glasses, can really have an interesting growth rate over the next 5 years.
Okay, and if we think long term, could the industrial segment be larger than the consumer segment?
Definitely. That if you take the 5+ year perspective, and that's absolutely in a sort of long-term strategy as well, to be adaptive to these new markets and new opportunities. And as we've done with the smartphone, you have one door-opening product, and then you get intimate with your customers, and then you understand more about what will happen around the corner, and then you build those products so they are ready when they need it. So it's a lot about agility as a small company.
Okay. And in terms of profitability, could that differ between the segments?
The key, I think, not really. I think the business model can vary quite a lot, and you can have sort of other ways to monetize on the real value for industrial customers because they are much more mission critical kind of products. But the key to profitability for us as a company is the scalability of having one platform that you sell to many different segments. Then you, of course, optimize each business model for that segment. But the real benefit of high profit margins comes from one software platform.
All right. And my last question, how important is profitability in your current strategy? Could you sustain this profitability while growing and venturing into new business areas? Or how should we think about profit in the future?
Right. I think you should. The ambition for us is to keep north of the 0 line. And as we see, even in different scenarios, we see it sort of very unlikely that we should dip on that curve. However, we said, especially now with new markets emerging, that over the next 2 to 3 years, growth is more important than profit. And over the 3 to 5 years, we think that the opportunity for really good margins are excellent, but with a much higher number on the top line revenue. So I think that is the best way to optimize this, to really make sure that we invest so we don't miss growth opportunities over 2-3 years, and then tune for maximum profitability year 4 and onwards.
Thanks. I think we'll have to stop there in interest of time. Thank you so much.
Thanks a lot.
Thanks.